Well, hello again, my friends. This is Latanya Powers of Storehouse Bookkeeping and Tax, and yes, it's been a while, but I'm here. We're getting close to the end of another year, if you can believe it. It seems like this year just went by so fast, but here we are at the end of it once again, the end of another year. But I just wanted to come to you because even though there are literally just days left in 2024, there are still things that you can do to help lower your tax liability for this upcoming tax season. So I just wanted to go through a list of 10 of those things that you can do, and they're very practical and almost everyone can do them. And so we'll go ahead and get started here with number one. So number one is to maximize your retirement contributions. Contribute to a retirement account like a 401k or an IRA. Your contributions to these accounts may be tax deductible, thus reducing your taxable income. Number two is to accelerate expenses. That means to prepay for certain business expenses like rent, utilities, office supplies, and things like that before the end of the year. This allows you to deduct them in the current year. Number three is to take advantage of depreciation deductions. So consider purchasing assets like equipment, computers, or vehicles for your business and utilize the Section 179 to depreciate them in the current year, helping to lower your taxable income. And again, that applies to your assets, equipment, computers, vehicles, things like that. And if your business purchases buildings, purchase a building. And it applies as long as you do it within this tax year. All right, number four, review and apply tax credits. So check for tax credits for your business. Things you may qualify for, such as research and development or R&D tax credits, credits for energy efficient investments. These credits directly reduce the amount of taxes owed. Credits are dollar for dollar, unlike deductions. All right. Let's see. You can pay bonuses or wages to your employees. So paying year-end bonuses or additional wages to employees before December 31st can be deductible, reducing your taxable business income. Number six would be to defer income. If possible, defer invoicing or accepting income until next year. By delaying that revenue, you can push the tax liability into the next year, which can lower this year's tax burden. Number seven, sell underperforming assets. If you have assets that have decreased in value, selling them can create a capital loss, which can offset other capital gains and reduce your taxable income. Number eight is to claim your business vehicle deductions. I cannot stress this one enough. If your business uses a vehicle, ensure that you are taking the maximum deductions available. You can choose between the standard mileage rate or the actual expenses, which would be your gas, maintenance, and those types of costs. But one thing I need you to remember is that whichever method you choose, you still need to have your mileage, your business mileage driven for that year. You also need to have the total mileage driven for that year. This is if you're using your personal vehicle. And we take the ratio of those to take either of those deductions. So you're still going to need to keep up with your mileage. So go ahead and update your mileage logs if you have not done that. You need to be keeping up with those as they occur. All right, so don't miss out on that. Number nine would be to review your business structure. If your business is structured as a sole proprietorship, partnership, or an LLC, it might be worthwhile to review whether changing to an S Corp or a C Corp would result in tax savings. Consult with an accountant to determine if this will be beneficial. Now, this is kind of a big step. This isn't something that you want to take lightly because moving to some of these other business structures not only may have some tax benefits, but it also has some additional responsibilities as far as paperwork and filings and things like that. So it's definitely something that you want to have a consultation on before you do them. All right. And I would also, even though this is in the list, this is something that I would actually at this point recommend for starting for next year. But anyway, I digress. Going to number 10, make your charitable deductions. All right, you can donate cash, goods, or services to qualified charities. These contributions can be deducted from your taxable income, lowering your overall tax bill. All right, one more note regarding charitable donations. They need to be to qualified organizations. Donations to unqualified organizations or donations directly to individuals do not qualify for this. So make sure that you are donating to qualified charities. Okay? And so that is the end of our list today. So again, before taking any of these steps, make sure that you consult with your tax professional or accountant to ensure that you're compliant with tax laws and making the best decision for your business. All right, so that is it for today. All right, you all have a happy holiday, and until next time, take care. Bye-bye.